The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call. I just wanted to pass a compliment to you. I've taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the June 12th. Terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a wonderful Wednesday, and I want you to know that I'm grateful for your presence here this morning. Our first course of action is to make sure that we know our daily outcomes. And my outcome during the next 2 hours is to teach you how to master the tools for trading. And that includes the tools of the mind, because when we can master the tools of our mind, we begin to think like a strategist. And that's really important because most folks only concentrate on tactics. So this morning you'll hear me use tactical terms like A to B equals CD, swing points, Gartleys and butterflies, as well as various candlestick signals that the sign makers of the markets, the bulls and the bears, form for us on every time frame chart that we decide to trade. Now, knowing how to use these tactical tools, it's really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. Now, let's make sure we don't conclude that failure and losing money are the same thing, because they're not. You see, in trading and investing, our spoilage is money. Just as running a household means throwing out food that's gone bad in your refrigerator. Now, here's the key. The key in trading and investing is to use stops. And as long as we have stops, as long as we have an exit strategy that covers both sides of the trade, that means we use a bracketed one cancels the other OCO type order out there, then loss of money is nothing more than spoilage resulting from a failed trading pattern, whatever it was that we decided to trade, whatever those reasons were. And that, folks, that's a part of any trading strategy. That's what creates and makes up your system expectancy. And that is your ultimate performance tool. So today and every day, let's do what we can to think like a strategist, because a strategist will slay the tactician all day long. So let's go look at one of our tools to help us think like a strategist, a tool I call enthusiasm is contagious. You know, the energy that makes companies tick depends on individual enthusiasm. Leaders with bright ideas and leaders that have the ability to inspire others are truly the generator of enthusiasm. And enthusiasm rubs off onto all of the people that are around them. It inspires them to accomplish great things, great pieces of work. Henry Ford, in fact, he once said, enthusiasm is at the bottom of all progress. With it, there is accomplishment. Without it, there are only alibis. In fact, if you study the real successful people out there, you'll find that they are full of enthusiasm for their work and the promise of the future. Yes, folks, enthusiasm is absolutely contagious. That's why we should treat our daily activities with a mental outlook as positive and make it an adventure. make it an adventure, because in doing so, it will lead to inspiring the same attitude in everyone that you encounter in life. A smile is contagious. Enthusiasm is contagious. And although the sun doesn't shine each and every day, it's always up there. All we have to do is get through the clouds. Enthusiasm, folks, is really contagious, and that is a beautiful thing. Of course, that's what we like to say here at TFNN. This is Terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, let's take a look at the markets here. We've got the S&P futures trading off 3.5 points. They're trading out 1940.50. NASDAQ futures off nearly 8 points. They're trading at 37.90. Dow futures off 24 points, trade out at 16,830. Russell 2000 off about 3 points, trade at 1163. Goldilocks up $5 right now. She's trading out at 1266. Silver up 10 cents, trading out at 1927. Light sweet crude up $1.59. It's trading out at 106. It's been up as high as 106.53 here this morning. The euro kind of flat out here. Our call-in number is 877-927-6648. Give me a call, folks. Happy to take a look at your stock chart, do whatever I can to assist you in your trading out. Let's go take a look at the Dow future. Let's start off by taking a look at the Dow. If you're watching us on TigerTV, what you're seeing here is, in fact, I want to adjust my tool. What you're seeing is the four index futures contracts out here. So let me get my cursor going, and then I can tell you exactly what you're looking at. Make that visible. Make that... track the price. We should be okay right there. In the upper left-hand corner, we've got the S&P futures. I got to adjust that. My apologies. I should have done that ahead of time. That's okay. It takes just a moment to do this. Always visible. Track price. Okay, we're good now. Okay. Upper left-hand corner is the S&P futures. Upper right-hand corner, NASDAQ futures. Lower left is the Dow, and lower right is the Russell 2000. We're going to take a look at the Dow here. Dow acting a little bit weak yesterday. If we take a look at the Dow now here, I did, if you were following the show yesterday, there were some new market profiles that were showing up on my screen here, and the folks, the Taz guys, were working on that solution for me. It was just a little upgrade to the current version of the software, but today's is real. And today here, from a daily standpoint, see, the Dow has been above the support level, the lower threshold level, the unfair low, ever since the trading session of May 21st. So it's been above the support level, got above resistance back here on May 27th. It's had a nice run since then. Right now, the unfair low or support is right at about right where it's trading at right now. So right around the 16, we'll just call it 16,767, because I can't actually peel that number out for some reason. Should be able to, but we're trading at 16,764. So the Dow future is very important for us to watch today. Why? Because if they break below that, that'll be the first time it'll be breaking a support level ever since really the time frame here of May 20th out there. And that would say we would see lower prices. If you take a look at lower prices, what does that mean here? If we just simply take a look at retracements and we go from the May 20th low, we go from that swing point to the high that came in here. Looks like the high swing point came in on the trading session here. It's a little doji on June 9th out at the 16,889 level. The 0.382 retracement level should be your first target. That's priced out at 16,640. That's if, in fact, support breaks. If it can't bust them down, well, maybe it tries to bust them up, and that bust them up goes up to the 16,889-ish level. Now, a normal retracement would actually pull back into the 0.618 area. That's at 16,486. So we're going to be paying attention to the Dow futures. If we go take a look at the other futures, so the Dow is weak out here. If I take a look at the Russell 2000, now the Russell 2000, I do have a 10-minute delay out here. Nonetheless, it also has formed a new market profile, and that says support here inside the Russell 2000 is 1149.84. You're trading right around the 1158 area, so it really is trading more towards its congestive area here. Its point of control, so it has not cracked where the Dow itself is or is trying to. Now, if we take a look at the kingpin out here, well, let's go take a look at the NASDAQ. NASDAQ shows that it does not have any kind of new market profile out here. It's just simply been moving sideways, working off the overbought condition. If you take a look at the bottom portion of my chart out here, what you will see is you'll see that price has moved into an overbought condition. How do we know that? Well, we utilize the 14 period relative strength indicator. It's on most charting applications out there. And you kind of use, you use the 70 and the 30 level as the normal, kind of like the normal EKG. You know, if you're going to go to a heart specialist cardiologist and hook yourself up to an EKG, you'd see a sine wave kind of moving in between, you know, a certain range out there. Well, the heartbeat of the markets, the normal range is in between the 70 and the 30 level. As the 70 level gets approached, that's when it starts to move into an overbought condition. Now, very bullish markets will stay in an overbought condition for an extended period of time. But you do want to be buying something when something is oversold. You want to start taking a look at maybe selling something when things are overbought. But you need to use, that's a tactic, all right? You've got to have a strategy. If you use that just as a tactic, you will get slaughtered. I promise you will get slaughtered out there. So that alone, if it was as easy as that as trading, you just sold it when the relative strength index got up to 70 and you bought when it got down to 30, you'd get slaughtered. So you have to have a strategy out here. If you take a look at the lightning bolt pattern, the A to B equals CD to the upside inside the NASDAQ, the 1 to 1.6 when it is at 38.18. We've seen a high out here so far of 37.99 actually earlier this morning out here. Nothing bearish at all about the NASDAQ. NASDAQ did certainly move the markets lower. The NASDAQ most certainly did have a retracement. It wasn't in May. It was at the end of April out there. But there's nothing bearish about the NASDAQ. If we take a look at the S&P 500, we look at the ES Mini, it too has formed. So we've got 3 of the 4 have formed new market profiles, new active market profiles. That says support is at 1934. You're trading 1941. Look, folks, if you do close below 1934 today, that is going to be short-term bearish. If you take a look at retracement levels, let's go do that. We just simply come off of the low out here from May 15th up to the high that was put in on the trading session well, looks like where's that trading session out here? Make sure I get the right high. I must have grabbed the wrong thing. Right around the 1954 level. That's on the trading session here of June 9th. Your dead cat bounce pulls you back into the 1920-ish type range. 0.618 retracement is about 1896. Those are 2 areas that you would be looking for as a target for any type of retracement. If in fact these support levels, these unfair low areas get taken out. Again, that number inside of the ES Mini is out at 1934. If we go take a look at what's going on inside your favorite currency pair and mine, that is the Euro Japanese Yen. You know, it was testing its hammer candle. In fact, on one trading session, it closed just slightly below that level, but it was rejected shortly thereafter. Right now, key level for us to be watching inside the Euro Japanese Yen today is going to be 1 to 37.96 out here. You're trading at 138.09. If it can bust through there, that, from a directional standpoint, is going to likely set off a move down to into the 134-ish type range. And that will be some pressure in the markets. But we're not there just yet. But we do know what to watch for. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's peek in on what's moving in the markets out here this morning. Pre-market Restoration Hardware, RH is the ticker symbol. Now, closed out at 71.35 last night. Last trade fired off at 83.50. That's up $12. That's up 17% out here. Let's take a look at this on a daily chart. Let's go see what this is going to try to trade into. So $83. That is one heck of a nice pop. That's going to get above the most recent swing point here. So now setting up a very large A to B equals C to the upside. You can see it completed a 1-to-1 A to B equals CD. That was back on April Fool's Day out there. But now let's take a look at the large one. In fact, I'll go back to the weekly chart out here because that's really what it's going to be doing, is moving above a weekly swing point as well. So let's pull this back here. It's Restoration Hardware. Now, the A point on the weekly chart is going to be all the way down here on the February 3rd low. That's going to be your A point. Your B point, which is going to go ahead and at least take out price-wise at the open, or appears to, is the March 31st high out there. And your C point is the retracement down into April 28th. So 1-to-1 says 80.80. It's already trading above that, is it not? It's trading at 83.44 right now. So that says it's going to gap up close to the 1 to 1.272 A to B equals CD, 86.65. Now, just because it moved there, That does not mean that you sell it. That's what a tactician might do, and we know tacticians would get slaughtered out here. So volume is going to be important. The weekly volume that it's dealing with, March 31st, 7 million shares out there. So far through yesterday, 5 million shares. So it's going to have no problem taking out the B point of an A to B equals CD up on the weekly chart out there. So Restoration Hardware looks PDB, pretty darn bullish. Garon Corp, GERN is the ticker symbol. It closed at 260. It's trading out at 324 right now, up 64 cents, up 24% out here. So at the 323 level, it's going to take out its weekly resistance area of its unfair high out there, so that is bullish. That says at 323, it's going to try to trade all the way back into its November 4th, 2013 swing point, the low of which is 356. So it's not all the way up there, but it closed inside 356, and that's a high-volume bar out there. So that high-volume bar looks like it's going to get tested. It's got a bit of supply, though, that it's got to get through. Big downdraft. Don't know what happened the week of March 10th. Excuse me, but there were 77 million shares to the downside out there. That is on a weekly chart. So far this week, only 23 million shares. So I don't think it's going to have the volume there. I would have to say that the top of that bar, which is 467, ought to be a pretty decent resistance line that'll take a bit of time to work through it. GT Advanced Technologies, GTAT, GTAT. It closed at 1741. It's trading out at 1785, up about 2.5%. Right now, on its weekly basis, it's got some pretty significant resistance at 1944. Apple, I don't want to look at Apple. Let's take a look at Facebook out here. Nothing against Apple. But Facebook closed out at 65.78. It's trading at 65.87. No big deal. How about Lululemon? Let's take a look at to the downside out here. Lululemon closed at $44.30. Right now, trading out at $37, so down $7 off 16% this morning. Let's take a look at this. Going to take out its most recent swing point low, which is the week of May 5th. That swing point low is at 42.28. Let's put this on a larger chart out here. So come on, grab it. So Lululemon. Boy, this does not look good. So it's going to gap down this morning. It is only going to be the second gap, so no exhaustion gap there. Let's put this on that is the weekly time frame. Let me put the daily time frame out here. So on a weekly, it's got one gap, so it won't gap down this morning because obviously we're already into the week out here. So I revert. I take that back. Nonetheless, looks like another A to B equals CD to the downside here. Let's go take a look at that price pattern. Inside Lululemon, you'd use your A point as the April 3rd high. You'd use as your B point the May 7th low. And your C point out here, that's on May the 13th. 1-to-1 A to B equals CD to the downside. Says 33.61. Where's it trading right now? 37. So likely to head to the 33.61 as its next target area. That was on Lululemon. If we take a look at Range Resources Corp, RRC is the ticker symbol. It closed out at 89.40. It's down about $3 here, off 3% this morning. It's trading out at 86.50. 86.50. That does not look good for it. It's going to be dealing with it's got this high volume swing point out here. So that low is at 86.29. So that's what it's going to test. Should get down to 86.29. We'll see if it can bust through that area. If it cannot, maybe it's just a bit of a consolidation. Ticker symbol again on that was RRC. You've got AmeriGas Partners, APU. That's off about 5% this morning. PBF Energy, that's trading down about 5% as well. Rio Tinto Mines, RIO, trading down $1.53, off about 3%. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading off 14 points, trading out at 16,829. S&P off 2 at 1941. Composite down 11 points, trading out at 4320. Russell 2000 off a couple of points, trading at 1163. Lead the charge. The upside is Restoration Hardware up about $10 right now. Land's End up about $4. Tesla up $1. EOG Resources up $1.62. Occidental Petroleum up $1. The XOP, the S&P Oil and Gas Spider Fund out there up $1.39. Hess Corp up $1.18. Noble Energy up $1.25. Devon Energy up $1.17. To the downside, leading the charge is Lululemon off $6 and change. Nordic American Outfitters NAQ off 18% this morning, down about $3. Amazon off 3. AmeriGas Partners down $2.46. Range Resources up $2. United Continental Holdings, UAL, United Airlines, that's off $2 this morning, down $4.46. Synaptics, SYNA, off a couple of bucks. Rio Tinto down $1.47. Baidu getting in on the fray, off $1.51. Our call number's 877-927-6648. Let me call, folks. Happy to take a look at your stock chart. Let's go take a look at gold, silver, see what we have going on out here this morning. Right now, gold trading out at about the 1266 level. Again, I've got the what I'm using here is the market profile. So because I've had to rejig the contract so we can get accurate market profiles out here, there is it's a new symbol, so there's a 10-minute delay in it, unfortunately. But that's okay. It helps us to understand what's going on in 4 different time frames. So if you're watching us on Tiger TV, and I hope that you are. If you're listening on your radio or your mobile device at TFNN.mobi, we really appreciate that. And, of course, you can get the live stream of this show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphones on it. Click on that. You will get the live stream of this show. Of course, the archive is on Channel 9. You can download this on iTunes. So many different ways for you to be able to take us with you. And whichever way you do, we appreciate that. Now, in the upper left-hand portion of my screen, I've got a 120-minute time frame. Upper right-hand portion, 240-minute time frame, so a 2-hour and a 4-hour. Lower left, we've got the daily. Lower right, we've got the weekly chart out here. So if we take a look at the 120-minute chart, we'll start there. 120-minute chart shows that the unfair high is at 1262. Prices above that. If you were trading based on 120-minute time frame, you would say, hey, it's okay to be long out here. Of course, you're going to see a little blue line that it's trading into out there. That may be a resistance line out there. Don't pay too much attention to that. What we're seeing on the 120-minute chart here is that you've got, did I do that? Yeah, we'll raise that up a bit here, is that this is on the 120-minute time frame, it's in bullish mode out here. A little bit overbought, a little bit extended. You can see the price relative strength indicator on that time frame is up at 73.07 out here. But nonetheless, nothing bearish about what it is we're looking at inside of Goldilocks on a 120-minute time frame. Let's switch over and take a look at a 240-minute time frame. Well, it too now has broken through. It closed just above it. That was at the 8 a.m. session this morning. When I say it, meaning it's unfair high, that was at the 1264 mark. You're trading at the 1266 and change. So on the 4-hour chart, you are in a nice little bullish type mode out there. That's what's going on there. Now let's switch down. Let's take a look at the daily time frame. Daily time frame also up and above its resistance. It's unfair high level. It's area where it says, hey, I want to go ahead and be bullish out here. Now I've really got to multitask because I got to turn my cursor back on. It just makes it a little bit easier for me. Okay, good. So that is in bullish mode out here. So now we got to take a look at retracement levels. Okay, just to use some targets. Now we got what we do have. How about that? We do have Goldilocks trading into this downdraft bar here, wide-ranging bar that was on the daily chart. So that was on the May 27th out there. Let me go turn that cursor back on as well. I didn't get it all. It just makes it so much easier for me to cursor labels. There we go. That makes it so much easier. Okay, now we're going to go take a look at retracement levels here. So let's put that on the screen. Let's go take a look at retracement, and let's do this. Let's use the conservative retracement. Let's come from let's just use the appropriate retracement. Let's come from the May 7th high out here, May 7th to let's use May 5th. Let's use the May 5th high. That's going to be our point, our 100% point for our retracement level, all the way down to the low that was put in on the June 3rd area. So you can see Goldilocks still trying to get above the 1269.20 levels. 1269.20, that is your dead cat bounce, your 0.382 retracement. If Goldilocks can close above that, that sets up a normal retracement into the 1287 area, your 0.618. So thus far, on three different time frames, you've got gold looking relatively bullish. On the weekly chart, not so fast. And the reason not so fast is because it's broken down below its unfair low, and this says on the longer-term time frame, gold is still in a downtrend out here. Now, if it can get above 1302. So the number on the weekly chart that you're looking at for gold, 1302.10, if it can close above that, then all of a sudden you're going to have on all 4 time frames that we're looking at here a bullish signal out there. That's what's going on inside of Goldilocks. Let's go do the same thing here and take a look at silver. Let me SSI, let's put that in there, see if I can pull that up. We take a look at silver. Now, in the case of silver, let's just go take a look at the daily chart out here. You've got the daily chart. Daily chart says you need to see price get above 1921. So now we'll call it 1922. So when it closed today above 1922 on its daily chart, it starts tagging along with gold. But otherwise, silver here is not giving the same bullish message that Goldilocks is. Let's go take a look at light sweet crude. Let's take a look at its market profiles out here. Let's go see what it is doing. Let's take a look at the daily chart out here. I can tell you on the 120-minute time frame, it's in bullish mode. In the 240-minute time frame, it's in bullish mode. On the daily time frame, on the weekly time frame right now, all of the resistance levels have been taken over. What we can see here inside of light sweet crude, we can see a 1A to B equals CD to the upside. That has formed. That's coming off of the lows back here on March 17th out at 94.41. Your B point happens to be on this one is April 16th high at 102.32 retracement down into the May 1st level at 97.23. 1-to-1 A to B equals CD is at 105.14. It's trading right around the 105.27-ish mark out here, but it's up above a resistance level that actually says that it probably wants higher price, probably somewhere around 107.29-ish, maybe even the 110 area in light sweet crude. That's what its charts are signaling to us as we speak. Let's go take a look at some of these equities here that are moving and grooving in the marketplace here. We took a look at a couple of them. Let's go take a look at Eagle Materials. EXP is the ticker symbol. That's up about 6% this morning. It's trading out at 95.18 out here. That is taking out a resistance level. Let's go see what it's trading into. So up and above a swing point out here from April the 4th. That had volume of 1.3 million shares. Gapping up this morning. Volume so far, 292,000 shares. So it's got some decent volume. If it can keep up that pace, it'll confirm an A to B equals C to the upside. Let's go paint that into our screen and see what that price projection is. Your A point being the swing point low on February 5th. Your B point being the swing point high on April the 4th. And your C point all the way down here, April 28th. That is at 78.58. 1-to-1. A to B equals CD. Takes you to a price projection of 21.70. Takes you to 100.31 out there. Your A to B move was $21.73. So 100.31. It's trading at 94.86. And as long as it can close above 94.25, it ought to do that and maybe then some, because there's no reason for it to not try to make the 1.272 A to B equals CD expansion take you up into 106. So 100 to 106 is the likely target area for it. Eagle Materials, EXP, is its ticker symbol. Let's take a look at Concho Resources out here. CXO is the ticker symbol. It's trading up $4 and change, up 3%. Volume-wise, so far this morning here, looks like a volume of about 151,000 shares. It, too, is breaking out above a swing point. Let's go take a look. It looks like maybe it did that yesterday. Now, that's a large A to B equals CD. That is a large one. Let's put this on a weekly chart. Let's pull this back, take a look at a weekly time frame, see what it's also doing on the weekly time frame, yeah? So let's take a look at the more accurate A to B equals CD here. That's going to be using the swing point from October 14th. So let's go draw that in. Let's take a look at that pattern, then we'll come back and take a look at Contra Resource. I'd use the swing low of April 15, 2013 as my A point. B point's going to be the high from October 14th. That's in 2013. And the C point, the retracement down to January 27th. You can see here, take a look at this move. Nice and strong move. There's a nice move on the A to B leg out there. That was a 44-point move. But if you take a look at how this thing came off of the C point out here, here. Take a look at that volume. Again, it's a weekly chart for Concho Resources that we're looking at. CXO is the ticker symbol. But take a look at that. Nice volume, nice wide price spread, accelerated volume coming off of a C point. This move here has been stronger than that first move on the weekly chart. That says this wants higher price. That says that this wants to trade up to at least 150.77. You're trading at 141.15 as we speak right now. CXO is the ticker symbol. Let's go take a look at a couple things headed to south out here. Granger WW. GWW is the ticker symbol. It's trading down about $2.59 right now. It's off $9 and change, about 3% out here. You see this ringing into, well, actually, let's take a look. This is a weekly chart out here. So this may find support. It's trading right now, trying to trade down. We'll see if it finds support at 256.52. That's its unfair high. But if it breaks through that area, ought to trade back to about the 246.64 level. We pull this back. You can see this is just really consolidating. This has been in a consolidation. It's a weekly chart. In essence, it's been consolidating for over a year. April 15th. Well, let's use the consolidation. Let's use, April 15th. April 15th, 2013 out here. So for over a year, consolidation low right around the 228 mark, and the consolidation high, we'll call that right around the 270-ish mark out there. So what's a 40-some-odd point consolidation out here? If it breaks through the 246 level, it'll go ahead and move its way down into the bottom of that consolidation. That's the weekly chart we were looking at. Let's put on a daily time frame, see if we get any kind of feel here. Looks like we've got some volume off of the high potentially. So far today, 114,000 shares. Yesterday was up with 337. Yeah. So there is some institutional selling is what it looks like inside this equity. That says that it ought to come back and where's our next real high volume bar out here? It's the trading session of April 30th, and that's really down towards the bottom of that consolidation area. That's at the low of about 246. Not all the way down, but it's down pretty far. And that is on GWW as the ticker symbol, Concho Resource. Let's go back in. Let's check in Lululemon. It's traded off of its session lows. It's off about $6 right now, but boy, taking out the B point with volume. This is a daily chart out here. The B point has volume of 3.9 million shares so far today. It's done 11 million shares. So I would have to say Lululemon has got some, turning into some real lemonade out there. A bad kind of lemonade. It needs a little bit of sugar in order to sweeten it up, and that does not look like it is in the cards as we speak right now. Let's go see what else we have moving out here. Let's take a look at Alaska Air. ALK is the ticker symbol. This has been a nice high flyer in the past. It's down about $3. Let's go see what it's breaking through out here. Looks like it's finally breaking a swing point to the downside out here. Yeah, it is. Let's see what kind of volume out here. That's the trading session. What we're looking at. Well, I'm looking at the most recent swing, which is May 15th out there. 684,000 shares. It's being broken with volume today. It looks like 240,000 shares in the first 17 minutes of trading out there. So this Alaska Air, where's this going to fall back to? So now what are we going to do on our chart? We're going to look at the bottom out here. We're going to look for a high volume bar. What sticks out at you if you're watching this on Tiger TV? What sticks out at me is this date right here, December 20th, 2013. So if this has got some institutional selling that is in place out here, one would have to beware. That's the sign out there. Beware, not beware of dog, but beware of high volume bars out there. That high volume bar down at a price point of 70.49 to the 74 area. It's trading at $93 right now. So we're seeing Alaska Air take out a swing point. No way to B equals CD down or anything like that as we speak right now. Let's take a look at the weekly chart, see what kind of damage, if anything, we have out here on its weekly time frame, see where those high-volume bars kind of stick out at us. High-volume bar, well, it's trading into this one right here. So here's the, it's trading in the April 7th, 2014 area. It says that if it breaks through 87.82, then it's probably curtains out there. That would be breaking a weekly swing point. So that's the swing level to be watching inside Alaska Air. out here. Bad-looking candle on a weekly chart out there. Not good on the daily as it's breaking through a swing point. The weekly number to be paying attention to. If you were in the stock and you wrote it up from the bottom, I would have to say still stay there. Of course, it depends where your stops were, how you were doing the money management, but don't let it close below 87.82 with more than 6 million shares out there. That would not be a good scene, and that is in Alaska. Air Group out here, ALK. Right now, we've got the Dow trading off 32 points, Russell down 5, S&P's off about 3, NASDAQ 100 off 9. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 32 points right now. It's trading out at 16,812. The S&P is off 3. It's trading at 1940. And the X100 off about 0.1%, a little bit more than that, off 5 points. Russell 2000 off 4 points, about 0.4%. The composite down 8 points out here. The industrials off 114 points. The industrials are really taking it in the shorts as we speak right now. Let's go take a look at a chart for the industrials out here. Let's put a new chart up on my screen. Give me just a moment to do that. So we got $TRAN. Let's go see what it is doing out here. Give me a moment to do one more thing. Where it should be right in front of me. Come on. There we go. One more thing to this. Should have had this done ahead of time, but I didn't. So let's go take a look at the transports out here. This is the weekly chart. Let's take a look at the daily chart as we speak right now. Disregard the market profiles that show up on here. They don't have any meaning at the moment. So if we take a look at this, had formed a nice little. This is trading now. It's breaking through a swing point. This is a daily chart out here. The swing, a little minor swing really from back on June 4th out here. But if we take a look at retracements, we're going to come off of the. We should come off of the May 15th swing point as we take a look at retracements here. That's going to be down around the price point of 77.06. So we're going to go from that level up to the high that came in, and that's right here on the trading session of June 9th. So you can see he's breaking through the .382 retracement right around the 80.46 type range out here. Says that it wants to move down to about 79.16 or so. So the transports here are struggling, to say the least. Let's take a look at, give me a moment here. Let's take a peek in on some of the S&P 500 sectors. Let's see what's going on inside here. You've got the technology sector basically flat. So not a big deal out there. It's trading out at 38.16, so that's no big deal. The financial sector, the XLF, it's trading out at 22.68. No, why am I not seeing anything move here? That's not a good sign. What do I have? No, there we go. Okay. So it's financial XLF is not doing too shabby. Healthcare sector, third weighting structure inside here, not doing too bad. It's trading at 59.81. Consumer discretionary is down about 0.5%. It's up 36. The industrial sector out here down about 34 cents. The energy sector, the XLE, it's trading up about 0.8%. It's trading up 0.76 out here. And we should go take a look at let's go take a look at ExxonMobil. Let's go see what Exxon Mobil is doing and see what is going on there, because that should be leading the XLE to the upside out here, with it being the number one weighting inside there. So let's look at the daily chart here for ExxonMobil today here above its resistance level. So it's breaking out to the upside. Resistance is 102.07. It's trading out at 102.63 out here. Volume behind the move so far today, 1.2 million shares, trading into a swing point. Has it gotten to the bottom of that swing point? Yeah, it most certainly has. That is the little doji candle from May 7th out there. That would be a B point. An A to B equals CD to the upside. That's got 11 million shares out there. That was on May the 7th. Up so far this morning with 1.2 million shares and a little bit less than a half an hour worth of trading out here. So 1, 2, 6, 12. Yeah, it's going to, if volume were to maintain this pace, and I don't know that it will, it would be moving into a swing point with volume out there. And I would say a close above 103.45 would set up a very large A to B equals CD to the upside inside of ExxonMobil. I don't care how you look at it. That's what it would be doing. So it's not there yet, but it is at least it's trading into that swing point. If it can close inside that level, which it has not done yet, that's at 102.79. The top of that ought to be tested. Well, folks, it is terrific Thursday out here. Thanks so much for starting your day off with me. Have a great day. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.